Hello, I'm Eric Wiley with Pac Res Mortgage. I'm one of the owners and founders, and I'm here with someone very special, someone I've worked with for over 28 years, Kristina Hubbard. We are, we grew up in the business.
We grew up together.
We grew up together, but Kristina is a professional that has stayed on the loan origination side. Whereas I took on some other roles in the company, and as we grew, I'm part of the corporate office and part of the corporate team now. However, Kristina has been basically in this Albany market. You grew up close by. You've served the market since the beginning of your career, and you really specialize in VA home lending. And so you're one of our people that within the organization knows the most about the product, has seen so many different types of transactions, and has seen those transactions in different marketplaces. So I thought today we could go over some of the key factors that you see as beneficial of the product, but also some of the things people may not know that the product can help with or do for a borrower, and some of the fears and concerns maybe of the borrower or the seller. In the case of government financing, sometimes that's had an interesting name to it in the industry, and I thought we could maybe start there. Like, what perceived notions around VA financing, even FHA, you could throw that in there, but specifically VA, what perceived notions do you see that buyers and or sellers kind of bring to the table that may not represent really how the transaction works?
Yeah. Well, Eric, thank you for having me on your show today.
Yes.
I really appreciate it. Great question. And it's something we struggle with a lot in the industry, is that sellers think that taking a VA offer is going to cost them a whole lot of money and that it's going to be really hard to get financing through. Absolutely not factual, especially if you have somebody who knows what they're doing with VA financing or has done a lot of VA financing. It's a pleasure to work with veterans, and they've done so much for our country that it's ridiculous to me to not get in there and put your sleeves up and try to make it work for a veteran. So I think part of it is just miseducation. People don't understand. So doing a VA loan, if you know what you're doing on our end and on the real estate agent side, it's a beautiful benefit for the borrower. In fact, one of the best benefits I think the veterans have is using their VA benefit.
And I would say that benefit has actually maybe improved over time. What changes have you seen with the Veterans Administration Home Loan that have maybe progressed over the time? It's still a little bit of an old school product, but it is, for us, it's about 30 days, it's about 30 years evolved since we first got into the industry. What have you seen change within the program, and what benefits does that provide to the parties involved?
Well, I think, first of all, a beautiful benefit of the VA loan is if you have any sort of disability with the VA, even a 10% disability with the VA, that the funding fee for the loan is waived for the veteran. And that's a really big deal, because that funding fee can be, the first time use, of 1.6%, or a subsequent use is higher. So being able to waive that funding fee altogether is a very big deal for the veteran. So that's something that I think people overlook sometimes. The other thing that I think has been a big, beautiful change is that the debt-to-income ratios for the veteran are more make sense than they've ever been. Really meaning, if you take debt-to-income ratio, when I'm talking about that, it's taking your obligations on a monthly basis, including the mortgage with taxes and insurance, and dividing it by your gross monthly income. And if that number used to be, they would try to keep it in that 45% range or better. And we've seen those be pushed a little bit lately, 50, even 55%. Because if it makes sense, if there's good compensating factors, then our underwriters are amazing, and they really work hard to get that veteran into a home. So I think those are some big changes. The credit score has been lowered a little bit, so we can do a little bit better, more inclusive of veterans that don't have maybe the highest credit score. So we're seeing those in the 580 range, even 600 range, but and sometimes a little bit better depending on the compensating factors for the veteran. So that's been a big change. I think the most exciting thing in the VA loan is that there's been a misinterpretation of the amount that a seller can pay on behalf of a veteran, and really it's been misconstrued through the years. We've always heard that the seller can pay 4% of the veterans' closing costs, but really it's 4% of the allowable closing costs. So that would include maybe paying for their funding fee, or actually paying off debt for the veteran to help them qualify. That's huge, absolutely huge.
So that's crazy. Most lending programs do not allow those features that you just mentioned.
Yeah.
Now let's talk about the funding fee, because I think that is something that hangs out there. People
Yeah.
think, oh my gosh, do I need to come up with this in cash? Or,
Yeah.
oh my gosh, is this going to be a part of my loan amount? How does that work?
Yeah, that's a great point. So the funding fee is financed into the loan, so the veteran does pay it over time in their payments, but the seller can also pay the funding fee on behalf of the veteran, which a lot of people don't know that can be part of that 4%. So that's actually a really big deal. So yeah, I think that the misconception for the veteran is they think they have to bring that in out of pocket. The idea of a VA loan is 100% financing guarantee. So that loan is treated by the lender as if the veteran has 20% down. There's nothing like it. There's absolutely nothing like it. And that's why we can tweak a little bit on the debt to income ratio or on a lower credit score. So it's a big deal.
Well, and that's something very different about this program is that the Veterans Administration Home Loan Program is seen and delivered as a benefit to those who have served, but also those who are serving. So it's not just for veterans, so to speak, that have served and are now outside of the
That's the
military. It's for active duty people as well. And so whether that changes the funding fee a little bit, the benefits of the VA loan program are actually extended to basically military people across the channels, but also across have you served, are you serving? So is there a surviving spouse benefit aspect to the VA home loan?
Yeah, there is a surviving spouse benefit to the VA home loan, and that's a lot of people don't understand that or don't know about it. So it's a great thing that we can dive into with you as well. And there's also some new rules around being able to buy we've married a lot of veterans in the last 20
this is something
years.
actually specific to this branch in particular. Give us a few examples
Yeah,
of that.
so we've had some amazing veterans that have come in here and want to purchase and they want to co-borrow together, and maybe they're not married yet. And so we've held 2 weddings here in Albany. It's been a lot of fun. We did some nice decorations and some beautiful lighting and took care of a couple veterans to get married so they could use that benefit together. And you can use it as an unmarried couple as well. There's just a little bit more of it's not 100% guarantee on that loan. So there's a little variance there, but there's a lot more that you can do. When I started doing VA loans, I'm married to a disabled veteran. They're near and dear to my heart. We are the Homes for Heroes affiliate member in the area, so we give a credit to our veterans as well as first responders. But it's something that when I first started doing VA loans in the mid 90s, nobody was doing them. Nobody wanted to do them. They were too cumbersome. There was too much paperwork, too much to do, and so I really dug in and wanted to learn everything about them because they're so important to our veterans and they are such a great benefit. And they do a lot of red tape when you're a veteran. They to get their military benefits, to get their medical benefits, everything. They're used to jumping through a lot of hoops. And so it's really nice to be able to have this VA loan for them so that they get this benefit of serving our country. It's a big deal.
Now, something that might be a little different about the program too is it's really aiming to help veterans and active duty people get into a home safely and soundly. So the flexibilities are actually maybe as technology has come into play with real estate finance, with real estate in general, some of the aspects of the VA home loan are a little bit old school, like manual underwriting. Can you explain that a little bit?
Yeah, so depending on what kind of a situation you have, I talked a little bit before about compensating factors, but sometimes just everything that we're doing with the veteran, it doesn't fall in that box, right? The automated system doesn't accept the approval. And so manual underwriting PacRez has the ability to do that with our VA loans. We have very talented VA underwriters that will help us to manual underwrite. If it doesn't fit in the box specifically of what we need, then we tell a story. We go in with the veteran link arms and work really hard to get those loans approved. And we've got some miraculous loans that have been done with PacRez for our veterans. So our underwriters are as passionate as we are about getting those loans done.
Now, we try to do that all the time, but fortunately the loan program itself and the people we have here behind the scenes helping us with this loan program really take it to heart to get across the finish line for those transactions that should get across the finish line.
Yeah, Eric, and I think a big part of this that people don't understand is the only loan that will allow, so let's say right now in our economy and what we're seeing and what I'm seeing as an advisor every day is that my clients' interest rates on their credit cards are astronomical. And when I ask them what they think their interest rate is on their credit card, they say probably 12, 15%. And I give them a little bit of homework and ask them to go check. And when they go and check, it's more like 29%, 31%, because what we're seeing right now is interest rates are incredible on car loans, consumer debts, that kind of thing. So for our veteran client especially, it's awesome to have the ability to finance in debt consolidation. And we can allow our veterans to borrow up to 95%, in some cases 100%, of their value of their mortgage to pay off debt. We have two different clients veterans we're doing loans for right now. Each of them are saving over $1,000 a month in payments.
That's crazy.
Even with the higher interest rate, we really look at every aspect of it. You might be at a 3%, 4% interest rate on your VA loan right now, but if we do a blended rate calculation, it'll blow your mind what you're actually really paying. So locking up that equity in their home is maybe not the best thing to do in this current economy. So I think it's the first time we've seen in our history that the average homeowner has, I want to say the number is $200,000 in lendable equity in their home right now is what the average looks like.
Yeah, all
Do you remember
time.
seeing that?
I have, and I don't have the stats right here in front of me, but we have all-time record amounts of home equity across the country. And it's not surprising. I looked probably 3 months ago or so, and over about a 6-quarter period, we had home values go up. I'd say maybe it's a 7-quarter period. We had home values go up about 45%, right? And so supply and demand were out of whack. We had people looking at housing a little differently, and maybe leaving one area and going to another, and driving some values up higher in some markets than others. But that is historical from the standpoint of they also got some really good interest rates.
Right.
That being said, today's rates, this is November of 2023, today's rates are a little bit higher than they were here recently.
Just a bit.
But that said, what can happen for a VA loan in terms of the IRRRL? So if you could kind of go over that real quick. So people can get into a home now. You can buy a house with the VA home loan, but you can also then reset the interest rate after a period of time and have it be market driven at that point. So you're not necessarily set forever in today's interest rates.
Yeah, and the IRRRL loan is an amazing loan. And it's the interest rate reduction loan. And what happens on the IRRRL is that the veteran that's made your payment on time on the mortgage for the last 12 months, we go in and make sure that you're still employed. We make sure that the payment has been made for 12 months. But then you're eligible for this rate reduction loan. And there's no appraisal, there's no qualification, again, from an income standpoint, as long as you're employed. And those loans are easy to close. They're easy for the veteran. There's some paperwork involved on our end, but we're very good at it. But what I'm telling people right now is, maybe we date the rate and we marry the house. I don't know. But if they want to see that kind of appreciation that you're talking about, 45% in that period of time, and we're continuing to see in our community right now, in our surrounding communities, about 8% a year is what we're on track to have for our clients, so for our community. So it's a big deal. So really looking at, okay, do we get the house now, even though the rate's maybe a little bit higher? And then get to that 6 to maybe 12-month time period and start really paying attention to see, does it make sense for us to jump off and of that loan and reset it into a better, more favorable interest rate for the veteran.
Now, you said something interesting about reduced documentation to arrive at that. Now, there's some benefits and reasons for this. One, it's a veteran who already owns a home and is already having a VA guaranteed loan. So the loan is already established and it's at one payment, and they can opt to then, if market conditions allow for it, receive a better payment. And there's a real reduction in what is necessary to do that. And it makes sense because it's the Veterans Administration on one hand, and it will still be the Veterans Administration. So having a loan actually be easier to pay for the veteran makes sense, and it's a reduced amount of documentation.
I think they have to recoup their cost of doing the new mortgage in 36 months, a break-even point in 36 months of the new mortgage. And so we do that calculation up front to make sure it makes sense. We won't spend a penny of anyone's money, not just a veteran, but anyone's money, until we know for sure it's going to work for them and make sense. And not having to do an appraisal when we do the IRRRL saves the veteran also the appraisal fee, which helps a lot in the cost of moving forward for that loan.
So today's VA home loan offers both current and old school kind of takes on how to perform the loan itself. But the overriding factor here is it's a benefit to people that have served and are serving. And it's also a benefit to take this program to someone who is in that capacity because of the flexibility and because of the goal of having safe and affordable housing.
Absolutely, yeah. And I think it's a disservice to our veterans as agents, as sellers, to say no or to not look at doing this loan for our veterans. It's a benefit that they've earned and deserve. So I'm all in on the VA loan.
You have proved you're all in time and time again. Thank you so much, Kristina.
Thank you, Eric. And when you said old school, did you mean you, of course?
Oh, I'm old school, exactly.
Thanks for coming to Albany.
Yep, thank you for being here and serving the market so well.
Oh, my pleasure.